Hello everyone, welcome to Keerthi's FinFo NRI. I am CS Keerthana. I run the consultancy, a firm which is specialized in NRI services and based in Dubai. Every week I bring and explain a video related to NRI investing, finance and tax related topics in this channel. In today's video, I am going to decode Budget 2025 from NRI perspective. Today's budget has delivered many surprises. Even though many people wished for it, no one really expected it to come true in this budget. So in this video, I'm going to explain three major announcements that's going to have an impact on NRIs who are investing in India, who are planning to retire in India, and also who are sending money from India to foreign country. First two announcements are going to have implications for both residents as well as NRIs. But the third one is exclusively NRIs. So in nutshell, as an NRI, if you have some financial transactions in India, this budget will impact your money management. As you are aware, when NRIs are managing money, there are two main challenges. One, getting the best exchange rate when you send money to India from foreign country. Second, when you receive money in India, navigating the frequent changes in taxation and compliance. To solve the first problem, we can use VANs. When we NRIs transfer money from foreign country to India, we face big problem. Usually these banks and money exchanges in the country where we reside, they charge a transfer fee which may look small, but most of the time we don't even realize that they are giving 2 to 3% lesser than the exchange rate which is shown in Google. But Vans, a neobank which is exclusively designed for NRIs, is solving this problem. It doesn't charge anything when you're transferring from UAE and gives exactly the same rate which is shown in the Google. It doesn't have any hidden fees also. And if you are in UAE, you can register with the code Keerthi5 to secure lifetime zero transfer charges plus 5% cashback on your first transfer. NRIs in UK and EU also can avail different offers. Both in UK and EU, NRIs can get exact Google exchange rate. But in addition to this, NRIs in UK can enjoy zero fees on your first transfer, followed by the transfer fee of £3 for the subsequent transfers. NRIs in EU, they can get zero fees on the first transfer with transfer fee of €3 after the first transfer. If you want to avail this offer, download Vans from Apple and Google stores and register with code Keerthi5 while sending money from UK and EU. Vans is also planning to expand in many countries. I will keep you updated about it once they do. Now, let's come to the second point. How to manage this money effectively when your money reaches to India. For that, you need to clearly understand the big announcements of today's budget and how it is going to impact you, NRIs. So, let's start with the first big announcement, that is direct taxation reforms. I am focusing only on direct taxation here. Budget taxation reforms today, that's going to impact both residents and NRIs who are having income source in India. Under taxation, many things have changed today, but we are going to keep our focus on tax slab changes and tax rebate concept, which is essential to understand, and tax on the FD interest and tax on ULIPs, because as an individual, these are going to have an immediate impact on us. This budget also touched upon changing tax culture, bilateral treaty models and presumptive taxation, which also will have significant impact on NRI finance. I'm going to explain all of this at the end. What changed in tax slab rate today? The big announcement was putting more money in Indian middle class pockets than in the government pockets, as promised by our Prime Minister Narendra Modi. So it has come up with revised rate of tax. Let's look at the new tax slabs, which is going to be 0 to 4 lakhs of income, nil tax. 4 to 8 lakhs rupees of income, 5% tax rate. 8 to 12, it is going to be 10%, 12 to 16, it is 15, and 16 to 20 is 20% tax. Over and above 24 lakhs of income, 30% tax is applicable. You must understand tax rebate concept also here. So tax rebate means if you have paid excess tax, government doesn't keep that with it, it returns. So this amount is called as tax rebate. So if you have paid, let's say 40,000 in tax and your tax liability was much lesser, it was not 40,000, so this excess 40k will be adjusted. So it's not going to be kept with the government. So what happens? This has an overall effect of reducing tax, right? So now in this budget, government had announced that it had designed entire tax slab and rebate in such a way that up to 12 lakhs of income, nobody will pay tax. So it is zero tax up to 12 lakhs of income. Why? See this slab. For 12 lakhs income, tax payable is 60,000 and standard deduction is 75,000. So obviously you are paying zero tax in this context, right? Now NRIs, I know, you don't have tax rebate benefit. Then how does it benefit NRIs or impact NRIs? Yes, it is true that we NRIs don't have tax rebate. Tax rebate is allowed only for residents or RNOR. So remember, if you are an RNOR, if you have the tax status, you still enjoy the benefit of tax rebate. NRIs, don't get upset. You will still be benefiting because of the change in the tax slab rate. If earlier you had any income such as interest from your NRO or rental income in India, then as per the earlier tax rates, you would have had more tax liability. If as an NRI, you had, let's say, 20 lakhs earlier, the tax liability would have been at 2.9 lakhs. But now it is going to be just 2 lakhs, so 90,000 net saving. You are benefiting now due to the change in tax rates. Let me draw your attention to one more important aspect. That's what, when I say income, just don't presume that it is going to be special rated income such as long or short term capital gain. It's excluded. So what is income? Income includes income other than the capital gain such as your interest or rental income. All these slab rate changes are referring to that income, not capital gain income. I hope you got clarity here. To understand how tax on FD is working now, let me give you a scenario. Let's imagine that you are an NRI aiming to retire in India. I am just talking from tax perspective. I still believe that you should have diversified portfolio. You should have high exposure to the high growth assets like equity to beat inflation. It's just to make you understand how this entire context can evolve, just from tax perspective. Let's assume you want to retire with 5 crore and you are keeping 1.5 crore of FD at 7% interest rate. So your income will be 10.5 lakhs at zero tax rate. Let's assume you are keeping remaining amount in a diversified mutual fund portfolio. This will continue to attract 12.5% long-term tax when you redeem, when you sell. Still, you are having high growth asset exposure which can beat your inflation, right? Remember, if you are choosing growth funds, you are deferring taxation till the point of sale here. Okay. So now when you are making this combination 1.5 crore in FD and 3.5 crore in high growth assets like equity, so you have this zero tax on interest income from FD which can cover your basic expense, and remaining as such it is growing well. So this can be a very good strategy if you are planning to retire in India. One portion absolutely at zero tax, one is deferred and you start SWP. Hope these two would have given nice understanding of how NRIs can benefit from the changes. Next is obviously tax culture. Finance Minister clearly said new direct tax code will have 50% less provision. So there will not be tax confusion, tax terrorism, because tax department will have to encourage trust over scrutiny, Vishwas over Vivad. Less provisions, more clarity, should be reducing the litigation. So NRIs, you don't have to worry about tax culture presently. Probably most of you have encountered, it is slowly changing. Even for filing your updated return, if you have forgotten to file the return, now earlier you would have had 2 years. Now it is increased to 4 years. You understood, right? For updated, the revised time is 4 years. So the next aspect of the tax reform is taxation on ULIPs. I know many NRIs have taken up ULIP plans, so I felt it is pertinent here. Earlier, non-exempt ULIPs were taxed at ordinary income tax slab rate. Non-exempt means where the premium is exceeding 2.5 lakhs or 10% of the sum assured, so it would have been taxed as if it is income from other source. Now the government says that if you are holding it for more than 1 year for long term, so if it is non-exempt category, then we will tax at 12.5% long-term capital gain tax rate. It will no more be treated as income from other sources but will be treated as capital gain. This is going to come into effect from 1st April 2026, where ULIPs which don't qualify under Section 10 Clause 10D will be treated as capital asset. So this Section 10 Clause 10D basically aimed at encouraging the small genuine life insurance policies, where government said if the premiums does not exceed 2.5 lakhs, then we are going to make it tax exempt. After that, what happened? Many high value ULIPs in their disguised form took shelter under this. Government had realized it and decided to tax them when the premium exceeded 2.5 lakhs or 10% of the sum assured. So it used to tax it as income from other resources earlier. Now the treatment of such non-exempt ULIP plans as capital asset is giving lot more clarity. So if you have ULIP plan which is exceeding the exemption limit, prepare to pay the tax at 12.5% for long term. Another specific announcement which can impact NRIs is BIT, or Bilateral Investment Treaty. This announcement caught my attention because government is actually aiming to reduce the cross-border taxation to attract foreign investment. It wants investors from foreign countries. What are the details of this treaty? We still don't have clarity on that. We have to wait. But I think we NRIs also may end up getting a lot more relief in coming days. When it comes, when there is more clarity, sure, you can expect video about that in this channel. So I feel this bilateral investment treaty will bring relief to NRIs. Let's keep our eye on that. Now let's come to the second big announcement, that is changes on LRS, TDS and TCS. So TDS, or tax deducted at source, see, there is a tax deduction on interest income of senior citizen, which earlier was, the threshold limit was 50,000, now it is raised to 1 lakh. For others, the limit has gone up from 40 to 50,000. So this doubling of threshold or increase had given more disposable income in the hands of the people, retirees and others. See, especially for retirees who are just depending on interest income, this is a huge relief. So NRIs, if you had kept any amount in your old parents who are actually financially dependent on you, it's a good news for you, because the threshold limit for TDS had gone up from 50,000 to 1 lakh rupees, it's doubled. Similarly, the limit of TDS on rental income also had gone up from 2.4 to 6 lakhs. It's a good news for everybody. Now about LRS. When residents are sending money for education or travel out of India, this LRS scheme come into picture, where tax applicable will be withheld. Now that limit, or the threshold limit itself, had gone up from 7 to 10 lakhs. And also government said that if it is remittance made for education and that remitted amount is coming from education loan taken from specified institutions, then it is going to be exempt. So LRS is not going to be applicable in the context of NRIs, but TDS is applicable. What we have to understand here is, government is trying to bring more and more clarity, uniformity and promoting ease of living and also liquidity in the hands of people. So people comply with laws willingly, spend and invest happily. Third point is presumptive taxation. This budget came up with a special provision to only NRIs. Presumptive taxation is a provision when person who is engaged in some profession or business, who is maintaining books of account, can opt to pay only on some percentage of the turnover. This is to encourage small taxpayers. So now this is extended to NRIs who are rendering services to the technology businesses in India, or electronic manufacturing facility, or anything related to producing electronic services in India. So it says presumptive taxation is made applicable on NRIs who are involved in this category. In this context, only 25% of the turnover is going to be taken as their income, and NRIs will pay tax only on that. Isn't it a great move? If you are falling in this category, I know you have a reason to smile. To conclude, this was a consumption focused strategic budget for me. Though the capex was at 10.2 lakh crores, which is quite lesser than the budgeted amount, government had to take this revenue hit so people consume more. I personally believe that investment and consumption led growth strategies, this is right approach, not lowering interest rate like others did. Because by making this credit accessible for everybody, they are just creating bubble in asset classes which will eventually explode. So it has to be capex plus consumption. This budget announced many things and addressed consumption issues, which were faced by India. So government observed sign of cyclical slowdown in economy. In the time of uncertainty or turbulence, how countries' strategic initiatives are going to be designed, what vision government or ruler has, and how are they executing these reforms, and how are they encouraging investment, boosting consumption, these all attain paramount importance. And if you observe the budget, the startup loan, MSME push, aim of launching India as global toy hub, and AI excellence centers in education, atomic energy, social security to gig workers, asset monetization to re-inject that capital in economy, capacity building and visa reforms for medical tourism, all are an assurance to us NRIs that India is still a great addition in your portfolio to play consumption theme, and no other country can take this place. Government is taking investor sentiment and consumption, if at all there was a slowdown, it observed, right? So the tax reform seriously and acting on it. This is a sign of having a responsive government. Whether the GDP is at 6 or 7 or 8%, this 1-2% difference is temporary. I will still continue to allocate 60 to 70% in India and will keep it as a consumption play and remain bullish. If you want to send money to India, don't forget to use VANS. And if you are in UAE, UK, EU, you can send money in exact the rates which is shown in the Google. And if you want to invest in India, don't forget to visit www.keerthisfinfo.com, or you can also write to info@keerthisfinfo.com. I will come up with another interesting video next week. Till then, see you. Bye-bye.